Alan, I know we got a number here coming out in just a second, but I really want to get your thoughts on what you saw from yesterday to today before those come in there, because there's been a heck of a ride for the last 24 hours, and that's if you didn't even watch the presidential debates.
And been some fun. We want the market to move. Volatility is opportunity. But look at it. The stocks, if you look at the macro market, look at the S&P. The S&P had bounced 5% off of its lows in a week. So it pulled back a little bit last night. Now, it's important to see how it responds. And if we can get back to unchanged, that's pretty significant in a very short period of time, that the buyers are still stepping up. The weather is changing, but I'm looking for these markets to get hot once again. I think things are set up, and I think last week was the key, the way that the S&P held 3,200 and had a bounce from there.
So, Alan, number just came in here. The GDP number here, quarter over quarter for Q2, came in at minus 31.4 versus an expectation or a forecast of minus 31.7. Looking here at the market, not really that big of a mover. Kind of want to get your take here. Was this sort of just a number that needed to get nearby it, or is this something we're already looking forward to some other numbers later today and tomorrow?
I think we're already past that. GDP has that tendency to be, looking backward. And it is what it is. So we're moving forward, and that's what the markets do. That's why they're called futures markets. We're looking towards the future. And what I want to focus on here is, you talked last segment about the dollar, but the dollar is such a key. And I think what we've seen here in the last few sessions is the dollar had that fake out breakout above 94, and then came back inside that longer term channel where it traded between 92 and 94. And right now we're right at the top of that channel. So let's see what happens from here. But, my goodness, what we've got going in treasuries and with the dollar are really going to be determinative of what happens here. But let's remember that the stimulus, that they can use that as a lever of stimulus to see, for these markets, if the dollar can weaken one more time and we can see interest rates move.
So, and I think it's a great focus, and I think the dollar has been, it's always on my radar. It's one of those ones I think you have to keep on and keep your close eye on, even though, because it does seem to really kind of be leading. One of the ones that normally is a dollar higher has sort of an inverse relationship is crude. And the reason why I want to go to crude is it sort of feels to me that crude has been stuck sort of similar to the dollar, right? In this 36 to 42 range. It kind of has been bouncing back and forth. But what you're getting is a lot of volatility within that range. I'm curious, is this really a demand issue, or is this really now maybe a true bellwether or indicator for what's happening in the economies because of the fact that it's got such quick short-term reactions to the marketplace?
Not moving that much. I mean, it's very tradable back and forth until it breaks out. I would like to compare it to, the way it traded in years past. We've seen all the assets move with seeing gold, crude, and stocks tend to move together. So that had been a positive. And now they've become a little disconnected. I looked at it in the fact that last week crude, was hanging around that 40 level as glass half full. But it did break down on Monday when stocks made another run to the upside.
Yeah, I guess for me, what I was just kind of surprised at is that we have this conversation of the economy seems to be getting a little bit better. People are doing more things, more travel.
But crude hasn't rallied yet. That's exactly.
Yeah, that's the piece that's.
And I have to say yet, because technically, the risk reward looks like it should follow along with the stock market recovery. And what I want to tie it back to gold again. The assets tend to move in similar nature. Gold had an important bottom when it went down to that 1850. Gold had been trading between 1850 and 2050, with that at one exception where it went above that for many, many weeks. So it came back to its breakout point, just like the S&P came back to its breakout point. So I think it's a positive that you've got stocks bouncing. Until last night, gold was, had a pretty significant little bounce off its bottom. And so hopefully bottoms are in place there. Let's see what happens with crude. I would be hard-pressed to see crude get pressured a whole lot more if those markets continue to move up.
So I want to follow up on the gold ones. That's where I was going, because I completely agree with what you're talking about. I guess my question for gold is look, maybe it's because it had that monster run that everybody expects that any time there's a little bit of concern that gold has to go up 36 points. I guess the question is, has that sort of safe haven asset now moved away? Because I do expect you would see gold continue to work its way up, especially if the stimulus plan actually gets through Congress and the Senate and gets signed by the White House.
But again, thinking is where I get in trouble. I have to look at the price action, and it was very important to see that level hold. I try and look at things on a more weekly basis, so you can factor out some of that volatility. But there are so many things that could be driving the gold market higher. Just the fact that we've got more, let's say, instability and more concerns again about the virus and the stimulus and the dollar. Let's get to the dollar one more time.
Yeah.
I don't think it can be stated enough that there's going to be some pressure points put on the dollar, and anything that they can do, anything that the federal system can do to stimulate the economy. Let's remember whose best interest it's in to make sure that this economy heats up one more time. I know in the last segment you were talking about the euro currency and the dollar, and let's remember how aghast we were when we first heard that interest rates should be going down and that the Fed shouldn't be independent and they should do what the president says. And we were aghast. We're like, that's never going to happen. It happened. Now let's throw something out there to think about. We're at zero interest rates. We've had the president have conversations about interest rates should be negative. So let's see if that comes as the next pressure point. The path for the dollar, you would think, should be lower with the pressure that's going to be on it to stimulate the markets.
So Alan, let's stay there and we'll go one more here with the dollar. My question for you, and we were just talking about in the prior segment, was with the euro, right? We have the euro pound pressure coming up on a Brexit conversation, which, by the way, has put pressure back on them. And the euro who had great gains to start, has pretty much given over half of those gains back. The dollar really hasn't seen that same move. Could you also foresee where Europe, and so that Brexit issue comes back into play, and now all of a sudden that pressure on the euro starts to push the dollar as well?
I think so. I mean, I think this Brexit is just so, we've had so many conversations about it, and the markets know better than I do, and it's reflected in the price. I love the way that the euro had that bounce from, 109 to 120. 120 is the midpoint of the last 5 years. So it really hit that wall and backed off. Let's see if these trends can continue. Again, the stock markets come back, and we've seen gold hit that bottom and bounce back. Let's look for this euro currency to make another leg up, that 118, 119 level, and see what it has to say. I think that's going to be very important. But it's always been a race to the bottom as far as everybody wants to have the weakest currency. But if everybody's trying to play that game, it's kind of it's self-defeating. So I don't know. But again, I think I can't understate in my mind. What we've seen, what I've seen as a trader, and I'm a free markets guy. What I've seen as a trader in the last 3 years, is there's a thumb on the scale, and hey, guess what? It's my job to make money. I'm not here to judge why people are doing what they're doing with the the economic levers, but I'm gonna ride the wave because they have some very, very, very big hands that have their interests at heart here. So let's see where these markets go.
Well, Alan, I appreciate you coming on the show. Great conversation here. A lot of different topics looking at between treasuries and gold, dollar, euro, crude. It really is, I think, a great way to look at it. We've got a big, bumpy ride ahead of us, and I appreciate you coming on.
But there's money to be made. There's money to be made. That's what people have to remember.
Absolutely. Being smart and being diligent with your risk. I completely agree with what you're saying. Alan, appreciate you coming on the show. Everyone, that's Alan Nuckman, Chief Market Strategist of Agora Financial. When we come back, we're going to take a quick look at